Joining me now, Matson Money founder and CEO Mark Matson. Thanks for joining us, Mark. How are you to navigate this headline-driven, tick-for-tick, news piece by news piece, highly volatile market?
Well, it's critical for investors to remain calm. I know that's easier said than done, especially in weeks and periods of time where the market seems to be very irrational and jumping up and down to very volatile. But I always remind investors, look, people say they don't like volatility. It's only half true. They don't like the downside volatility. They love the upside volatility, and they have to take one with the other. So many people are freaked out about the tariffs. My opinion on the tariffs is Trump is a great negotiator. He's bringing that to bear. He knows how to play his cards. And I suspect that a lot of this stuff will be wrung out of the system, and he'll get a lot of wins. And so for a long-term investor, I would just ignore the tariffs altogether.
You're saying have faith and patience. Meanwhile, I'm covering my eyes, and I haven't checked my 401k. I don't want to know because I have the advantage of time. But look, some investors nearing retirement, they don't, and they're probably very nervous right now. Mark, I wanted to ask you about the weaker volume days that we've seen. Is that exacerbating any of the volatility, or are you just chalking it up to it being the days around Easter?
Well, the way to deal with volatility is not to try to predict it, because the future, to anyone with common sense, we know is unpredictable. So what you do is you diversify your portfolio. You don't just have all large U.S. stocks, which most people make that mistake. You diversify internationally into Europe, Asia, and emerging markets with your equity part of your portfolio. And then you have to own high quality short-term fixed income. So if it does crash in markets on the beginning part of the year, we're down in the ballpark of around 10%. But if it crashes and goes down, like it did in 2000 when it went down 30%, or 2008-9 when it went down 50%, then you have to sell your fixed income, force yourself to buy those equities while they're down, restore your portfolio back to balance. That's easier said than done, but a prudent investor will do the opposite of what everybody else is doing.
That's why they seek you out. The Treasury Secretary, Scott Bessent, spoke to investors this week. He says he's optimistic that the tax cuts will pass by July the 4th. It seems right around the corner. What do you think the impact of extending these tax cuts and maybe getting some more tax cuts that would help the middle class, what impact would that have, not only on the economy, but specifically the markets?
Yeah, so this is a topic that's near and dear to my heart. Dr. Art Laffer, I've been friends with him for many years, and he's on my academic board. We were talking about this morning. Those tax cuts have to be preserved. They cannot be allowed to expire. It's going to hurt millions and millions of Americans if they do. And look, when they were passed, the people that were making, at the top tax brackets, the tax bracket came down, but they took away a lot of their deductions, such as the state income tax, and that actually forced a lot of people, even though the rates were down, to pay higher taxes. And what I'm really unhappy, I have my Fox News app here from this morning. Just recently, some Republican senators and congressmen are talking about raising taxes from 37 to as high as a 40% income tax bracket. That's disastrous. Those are entrepreneurs. Those are business creators. Those are job creators. And they're going to seriously hurt capital. It's un-American. It's anti-capitalism. It's destructive. The federal government, even right now under the current tax bracket, if you look at the maximum tax plus employment tax plus state tax, they want 50% of everything you make. When you earn money and invest it, they want 30 to 50% of it. And then when you die through the estate tax, after your exemptions, it's 40% now. Some congressmen are talking about raising it to 45 to 50%. That's half when you make it, half when you invest it, half when you die, and that destroys capital and destroys America. They better do the right thing with this tax law and get it straight and not play favorites, give everybody a break they deserve.
Money is mobile. It could leave this country, and that's what the president said this week. Mark Matson, thanks for the time.
My pleasure.